Hi, I'm James Dunn. Welcome to the Inside Network. A nimble approach to fixed income is key to managing volatility as market conditions continuously evolve. Welcome to In Depth, and joining me today to discuss investing in Australian fixed income is Chris Siniakov, Managing Director of Australian Fixed Income at Franklin Templeton Investments. Welcome, Chris.
Hi, James.
Pleasure to have you. Before I ask more detailed questions, Chris, could we kick off with you introducing the really key characteristics of the Franklin Australian Absolute Return Bond Fund?
We build our absolute return strategy starting with cash as the benchmark, so a clean sheet. And then we actively build positions into the portfolio where we see opportunity. We categorise our positions into two high-level buckets, the macro insights and our security and selection insights. When we combine these factors together, we get a really diversified portfolio. And over the medium to long term, this develops into a nice, consistent return profile for investors with regular income.
Chris, could you recap for our viewers what's been going on in the Australian fixed income markets, particularly over the last 2 to 3 months?
Certainly. The last 2 to 3 months have been especially volatile for fixed income markets here in Australia and around the world. But the pressure in Australia has been particularly intense. We've basically had this tug of war between the market and the Reserve Bank here in Australia. The Reserve Bank, through its monetary policy setting at 0.1% and its yield curve control in term yields, has wanted to suppress yields. But the market, looking at the data and anticipating what is likely to come in 2022 and beyond, is wanting to factor in higher interest rates in future. The RBA is pushing back, and this tug of war has developed, and all of a sudden the market has almost pulled the RBA over, and we've had this lunge in yields higher. So in October we had the second worst return in the Australian Fixed Income Index in history, only to be beaten by the return in February earlier this year. So we've had two particularly sensitive months in fixed income in Australia, and it's a sign of the times. We've basically had an environment of suppressed lower yields in Australia and around the world, and when the market wants to sort of release and reprice a positive story, we're getting these significant lunges in yields to higher levels.
Why is the fact or the appearance of inflation starting to pick up so surprising seemingly to investors?
Yeah, inflation is always difficult for people to forecast. Most forecasts this year, from central banks to investors to the average man on the street, have really felt that there's likely to be a surge in inflation as we recover from COVID. And that certainly happened through the second quarter of this year. And post that, everyone expected that it would then subside back to a more normal, more traditional level. Unfortunately, with the recurring stop-start economies around the world, we've basically had an extension of the inflation period. And so the central banks basically categorise inflation as transitory, and everyone is now challenging whether it's more persistent. We will see in the fullness of time, but frankly, we feel that the pandemic initiated the inflation pressures. So if we get through the next year or so with an open global economy, we should return to pre-COVID levels in inflation.
Chris, what's your team's outlook for inflation and the economy here in Australia over the next, say, 6 months?
Yeah, like our view for the rest of the world, we think that the reopening of the Australian economy and the global economy will release some of the pressures that are driving inflation today. We feel that that's likely to start really around these latter months of 2021 and through the first quarter of next year. And so we're looking, for example, for the global labour pool to become mobile again as borders come down and take away some of the pressures that are emerging in inflation.
You manage an investment strategy that's different to most traditional bond funds that listeners might be familiar with. Could you detail what absolute return means in the context of fixed income and how it affects the way you make investments?
Yeah, so one of the challenges for fixed income investors is that the traditional market has shifted in regards to its risk return composition. So what we're trying to do with absolute return strategies is to restore the defensive characteristics of our asset class. So We, for example, don't manage against a benchmark index which has inherent duration and inherent constituents. We manage against cash, so it's a clean sheet and every position in the portfolio is an active position. What we ideally like to do is make sure that different views go into the portfolio with different return drivers, so you have true correlation. Ultimately, when you package all of this up, over the medium to long term, we're looking for positive annual returns, preferably positive real returns after adjusting for inflation, and regular income for our investors.
People look a lot at the negatives in the markets, Chris, but what are you seeing in terms of opportunities out there in the markets at the moment that's quite exciting to you as a team of fixed income managers?
Yeah, so because our style is an active approach to fixed income, the fact that there's been a return of some volatility in the market excites us, because that gives us opportunity to demonstrate our skill and generate greater return for our investors. Equally, we have these episodes where yields rise fairly dramatically. In October, we had a most abrupt adjustment. In some measurements on historical comparisons, it was in the order of about 8 standard deviations of a normal market. So once that transpires, we then look at the landscape once the dust settles and see lots of opportunities for our investors over the coming 12 and 24 months.
Chris, what makes the strategy so unique?
There's a few things that make our strategy unique. Firstly, being an Australian-based manager but part of a global group gave us the opportunity to design a strategy specific for Australian investors rather than just importing a global strategy and putting it in Australian dollars. So what that means is we could meet with investors in the design and formulation of our strategy to understand what their needs are. So we begin with an Australian core in terms of our allocation of capital into the portfolio, and then where it makes sense, we'll take some select opportunities from abroad. Some of these opportunities will be in other developed markets, so for example in New Zealand or the United States, Canada, but we also move into Asia, and we stick to the larger, more developed parts of Asia, but they offer some different return drivers to the developed economies in the West. And so that brings us a specific sort of return to Australian investors. Importantly, what we do as a team in Australia is we take each position directly in our portfolio. So we don't outsource any of our portfolio to any other parts of the Franklin Templeton network or outside network. We basically take the exposures that we want, whether that's actually the sensitivity to duration or interest rates, whether that's inflation, and whether that's to credit risk. We take those exposures very directly and specifically in the magnitudes that we need.
Chris, thanks very much for your time.
Thank you.